This is Craig Haugard with your Financial Issues Ag Update. The corn traded slightly lower in anticipation of what is expected to be a bearish USDA report today. Traders are looking for the report, which will be released at noon Eastern Time, to show a projected 2021 carryout in excess of 3 billion bushels. Traders were encouraged by the weekly export inspections, which came in at a solid 52.5 million bushels. After the close, the crop progress report showed the corn crop is 67% planted, with 24% of the crop emerged. The planted acres number is running 11% ahead of the 5-year average. As I record this, the overnight spot corn futures are trading a penny lower. Soybeans were higher yesterday on the rumor that China had purchased 240,000 metric tons of beans for the current marketing year. Weekly export inspections were stronger than the previous week, coming in at 18.2 million bushels. The crop progress report indicates the crop that's being planted ahead of normal, with 38% of the crop now planted versus the 5-year average of 23%. 7% of that crop has emerged, which is 3 points ahead of the average. In the overnight trade, spot soybean futures are trading a penny and a half higher as I record this. Wheat played out the sell the fact part of the rumor sell the fact adage. We had frost, as the trade expected, and it covered the area inspected. In fact, it was a degree or two colder than expected. In the face of that news, both Chicago and Kansas City winter wheats were lower. The fear that spring wheat planting was still lagging allowed Minneapolis to close higher for the session. Weekly export inspections came in at 12.5 million bushels, as it becomes clear that we will fall short of the USDA's export projections. The crop progress report showed the spring wheat crop at 42% planted, which is well behind the 5-year average of 63%. 16% of the spring wheat crop has emerged. In the world of winter wheat, we have a crop that slipped 2 points last week to a rating of 53% good to excellent. 44% of the winter wheat crop is now headed out, which is just slightly behind the 5-year average of 40% or 50%. In the overnight trade, Chicago is 4 cents lower, Kansas City is down 3, and Minneapolis is trading 2 cents lower. Cotton started the week on a stronger note, with the July futures finishing 36 points higher to settle at 56.63. The weekly progress report shows the cotton crop at 24% planted, which is just slightly behind the 5-year average of 27%. In the overnight trade, we have spot futures trading an additional 19 points higher. Livestock futures were lower straight across the board. June live cattle futures ended $3 lower, while August feeder cattle were $4.27.5 lower for the day. Lean hog futures were lower as well, with the June futures down $1.42.5 at the close. Class 3 milk futures, however, continue to work higher, with the June futures closing up 75 points as they settled at $14.43, and the overnight trade were trading an additional 32 points higher. And meat cutout values continue to work their way higher. Yesterday saw choice beef boxes $7.70 higher as they closed at $468.58 per hundred. Select boxes were $3.98 higher to settle at $452.97. And pork carcass values also worked their way higher, with the cutouts finishing up $5.16, closing at $121.66 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.